Hey everybody, I'm going to do a quick video. It's basically a follow-up to what we discussed this morning. I'm going to use Rio as one of the chart examples. So we're going to basically just be looking at the hourly candlestick, whether or not it's green or not, and then how that translates into looking for buying opportunities during that hour. So I'm going to do that using this horizontal line and blocking out the hours here. So you can see here, this is actually the opening print of the first hour, and this is the first hour of buying, or the first hour of 5-minute candles. So you'd be looking for well bid candles to buy because that current hour is green, and that also is the current opening price for the day. So I'm actually going to duplicate that, and we're going to bring this into the next hour. So that is right here is the 10:30 candlestick. So from here to here is 10:30 to 11:30. So as long as price is above this, which means that the hourly candlestick is green, then you're still looking for buying opportunities. Plus, it's still above the opening price. So now you have double the situation. Then we work our way over here to the next hour. And right here is where the hour starts. So right out of the gate, this hour, you would just look for well bid or inside 5-minute candlesticks. Plus, obviously, it's still above the opening price. Now we go out another hour to 1:30. So now we have 12:30 to 1:30. Here is the opening price for that hour. So as long as it's above this candlestick, everything is green. And now we work our way into the current hour as well, which is right here. And now we're working on that current hour. So that's how you basically block out hours and only look in that direction. So the opening price is down here. It's been above the opening price the entire day. And then you just keep blocking out those hours. So we can do the same thing in Morgan Stanley. If we draw the opening price, and then we draw the horizontal, the vertical line, and we go out to 9:30 to 10:30. So there's the opening price. You just look for inside candlesticks or well-bid candlesticks to buy during that hour. Then we move out to the next hour. Now, all this is happening while you're watching your screen, looking at the color of the existing candle, of the existing hourly candlestick. So there's the opening price. We'll just do this one more. So there's the opening price for the day. Right there, that's the first hourly candlestick from 10:30 to 5-minute candlestick. That's the open, so that's the opening price. Now you're just above the opening price. You're above this hourly candlestick. So this inside 5-minute candlestick is the entry. Now we move out one more hour, and we go to the start of that hour, which is right there. Then these well-bid 5-minute candlesticks would be the entry for this hour. So you're above the opening price, and you're above a green hourly candlestick. Now we work our way out to another hour, which is starting right here. That's the 12:30 candlestick. And then we go out to the following hour. So that's the opening price of that hour. This is the opening price of the day. So you'd be looking for entries here. This inside candlestick didn't fire off, nothing to do. So now we go to the next hour, which is the hour that's unfolding right now. And that is the start of the new hour. You have well bid, well bid, well bid, well bid, well bid, well bid. So you actually had 6 different chances to get long here. And that's how you work what we discussed this morning, the very shortest time frame. We're looking at the hourly trend and then only looking in the direction of the hourly trend. And then when you add the change from the open into that equation, it adds a little bit more credibility to the argument.